I know it's a little concerning. Banks are taking back properties at a rapid rate. We had adjustable rate mortgages, job loss, death, divorce, but the big one is the moratorium that they had on foreclosures. Remember, a couple of years back, we had this thing called COVID, and with COVID, there was hardship, and with hardship, people got to basically not pay their mortgage payment. And when they didn't pay their mortgage payment, the bank basically said, well, we can't foreclose because the United States government said we cannot foreclose. However, those mortgage payments that have been behind, some of them for years, are now being called due. The result, banks are taking back houses. So a question you may ask is, Wayne, how did this happen? How did all this all of a sudden happen where we have foreclosures coming to the market at a faster rate? You have to know this, for 3.5 years, there was a lot of homes that didn't get foreclosed on. There was a lot of homes that were in the queue, if you will, of banks, and they couldn't foreclose. They didn't foreclose. That queue has now come due, if you will, and so people that were behind in their mortgage, now they're giving eviction notices. The banks are taking the properties back. But here's what you have to understand. It got confusing for a lot of people because they did this thing called a forbearance. And a forbearance is when basically you get to delay your mortgage payment. So if you get to delay your mortgage payment, say 6 months or 9 months or a year, that doesn't mean that you just start paying your mortgage payment again. Just because you had a forbearance, you now have to come due with all of those payments. Now, I know what you're thinking, man, that's crazy, Wayne, and that's not always the case. It really just depends up to the lender, but you have to understand, when you buy a house, you're signing all these documents, somewhere 70, 80 documents, and bottom line, they basically say if you don't pay, you don't stay, so you have to pay your mortgage payments. That's what I always suggest to people. If you get behind, cut back in hours, whatever the situation may be, you can call your lender and see if they'll work with you, but you also have to read the fine print because you may be talking with somebody that's an employee of that mortgage company that may not be there this time next year. They may not be there this time next week. Now look, I've been there and done that. I've been faced with my financial hardship. That's why I try to educate as many people as I can. My name's Wayne Turner. For nearly 30 years, I've bought, built, flipped, sold thousands of houses, helped thousands of people, and I share that with you so you can have the confidence knowing that what you learn from me is from actual real life, tried and true experiences. So give us a thumbs up if you like this video. Let's jump in. Now, some important information to know is this. Whenever you get notified that your home's going to be foreclosed, if you or someone you know that's behind, send them this video so they can watch it. Share that with them. Give me a thumbs up if you've liked this information so far, and of course, subscribe to the channel. But here's what happens. Whenever you get a servicer, whenever they come knocking on your door and they say, hey, you've got to be out of your property, you have 70 days from that day in order to be out of your property, because at that day, that's on that document, the sale is going to happen at the courthouse, whether you like it or not. Now, the reason why I say share this video is because you can stop a foreclosure. Anybody can stop a foreclosure, and here's how you do that. If you're 70 days or even 2 weeks or even a week from the actual foreclosure date, you can reach out to a good real estate agent that is familiar with short sales that's willing to help you. Now, this doesn't mean you're going to be able to keep your house or save your house, but it will stop and slow down the foreclosure date. And here's what you're doing. You're reaching out to that agent to put the home on the market to sell the home. Now what you're doing is you're trying to save your credit a little bit, because if they foreclose on your home, it may be 5 or 6 years before you can get another loan to purchase a house. But if you can sell it outright, oftentimes in today's market, there's lots of equity in your home. But even if there's not any equity in your home, the lenders oftentimes will do what they call a short sale. And that's where they actually accept less than what you owe them. The real estate agent will put it on the market. They'll get an offer for the property. Once they get an offer, they submit that to your bank, your mortgage company. They'll put a freeze, a stay, if you will, on that sale of the property. And once they put a freeze on that, they'll work with you, negotiate you. So that will buy you a couple of months, if you will, 2 to 3 months. Now, keep in mind, you are selling the house. And when you sell the house in that manner, the bank is basically out of it and you're out of it and the house is sold. But it doesn't show up on your credit per se as a foreclosure, because if a bank forecloses on your house, it could be 5 to 7 years before you can get any kind of loan for another home. Now, if you want to see a list of these homes, you can go to findmyforeclosure.com. You can simply click on your state, your county, your zip code, city, it doesn't matter, and you can see the list of those properties there. But how does this happen to so many people? Well, you have to understand, oftentimes in today's society, homes are built and bought with 2 incomes. And with 2 incomes, if there's ever a separation, then you're left with one income. And if you can't pay the mortgage payment and the household expenses with one income, then oftentimes one person's responsible for the mortgage payment and it doesn't pay it, and then confusion happens, and the next thing you know, you've got a foreclosure. But look, you just have to know it can be prevented, it can be stopped, and how that is simply selling the property. You can still sell the property before the bank is taking it back. It's still your house, and when you sell the property, there's likely some equity there in the property. And the reason why banks will work with you through what they call a short sale is quite simply they don't want to take the property back. They'd rather not take the property back. When they take the property back, they're going to have to go through the legal proceedings that's required by the state, and every state is different. And most of the times when they take a property back, you have to have an attorney involved. And when they get an attorney involved, they're going to have to pay more fees. So believe it or not, it actually benefits a bank. They actually save money if you would short sell the house and just take care of it on your own. And in doing so, it doesn't necessarily help your credit per se, because if you've been behind in your mortgage payments and your credit's already bruised, however, it will help a foreclosure from showing up on your credit bureau. Now, something else that we've seen people do, and I would never suggest anyone doing it, is that putting a home on an ARM, an adjustable rate mortgage. Oftentimes people will put a home on an adjustable rate mortgage because you have to consider, you have to qualify for the house at the current interest rate, but your interest rate is adjustable and it can be really low. So for example, when the interest rates were 3%, well, you could get an adjustable rate mortgage for about 1%, 0.9%. It was kind of crazy, which mainly had your payment really low. But you have to understand, for 11 years, mortgage rates never went over 5%. As a result, it caused homes to increase in prices. And after a decade of that, homes became real expensive. And then all of a sudden, in 6 months' time, they doubled the interest rates. And those people with an adjustable rate mortgage, those rates and those payments nearly doubled. Now, I'm going to tell you, I've faced some financial hardships. I've been in some financial pinches, so I get it. I totally understand. That's why I try to do my best to educate as many people as possible. The stuff that I've learned over 30 plus years in and around real estate, money, and finance, anything I can do to help, that's what it's all about. And I always suggest to people, when in doubt, try not to be late on your mortgage payment. Sell stuff. I know you may get behind on a credit card and you have a $1,000 balance and they're calling you because you hadn't paid your $93 payment. Listen, your mortgage payment is more important than a credit card payment. So look at everything. Write everything down on a piece of paper. What you have coming in, what's going out. Sell furniture, work 3 jobs, do whatever it takes, because your home is one of your largest financial assets. I thank you for watching the video. Give me a thumbs up if you like this video. Leave us a comment, share it with people, and most importantly, subscribe to the channel. I'll do my best to make sure you learn something new on every single episode.